Your money-making broadcast starts now. Wall Street wrapped up a relatively quiet session on Thursday, but beneath the surface, the tectonic plates are shifting for what could be a much more eventful stretch ahead. The S&P 500 ended at $720.75, up just 0.3%, while the tech-heavy Nasdaq 100 outperformed with the QQQ gaining a full 1% to close at $674.15. The Dow Industrial slipped 0.3% to $495.02, and the small-cap Russell 2000 added 0.5% to $279.28. Today told a clear story: technology is reasserting its leadership, commodities are flashing warning signals, and the old guard on Wall Street is officially passing the torch. We have a lot of ground to cover, so let us jump straight in. Let us start with the biggest story of the week, the Berkshire Hathaway annual meeting. For the first time in decades, Warren Buffett was not the center of attention. Greg Abel took the stage as the clear successor, marking a genuine generational shift at one of the world's most closely watched companies. Berkshire shares closed at $473.01, down 0.1%, and hit a new daily low in the process. The market is still pricing in uncertainty about the post-Buffett era, but Abel's message was consistent: Berkshire's culture and capital allocation discipline remain intact. Investors should watch the next few quarters closely for the first real test of Berkshire 2.0. The real question is whether the Buffett premium that Berkshire has enjoyed for decades will persist under new leadership. Meanwhile, oil continues to dominate the macro conversation. West Texas Intermediate crude closed at $102.16, down 2.8% on the day but still trading at levels that would have seemed unthinkable just 18 months ago. More striking is what the prediction markets are saying. Kalshire traders are now pricing in a better-than-even chance that WTI exceeds $125, a level above the Iran wartime high of $113. This is not just a commodity story, it is an inflation story, a Federal Reserve story, and a consumer spending story all wrapped into one. Every dollar higher at the pump takes a direct bite out of discretionary spending across the economy. And with geopolitical tensions in the Middle East showing no signs of cooling, the risk premium in oil is not going away anytime soon. Speaking of the Fed, Jerome Powell will remain as a Fed governor after his chair term concludes, serving until at least August. That continuity signal matters because markets hate uncertainty more than they hate any particular policy stance. But J.P. Morgan Chase CEO Jamie Dimon threw cold water on the mood by warning of what he called some kind of bond crisis on the horizon. Dimon has been ringing alarm bells about fiscal sustainability for years, and the bond market is starting to listen. Gold is hovering near all-time highs at $4,621 an ounce, telling you everything you need to know about the demand for hard assets in this macro environment. When the world's biggest bank CEO warns about bonds and gold is at record levels, the message is clear: hedge your bets. Apple reported earnings after the bell on Wednesday, and the stock jumped 3.2% today. Revenue beat expectations, but the elephant in the room remains China. Tariffs dominated the earnings call, and Apple's exposure to both the US and Chinese markets makes it the ultimate battleground stock for the trade war narrative. Supply chain diversification is happening, but it is slow, expensive, and the timeline remains highly uncertain. For global investors, Apple is a proxy for how the US-China economic relationship evolves from here. The semiconductor complex had an outright banner day. Intel surged 5.4% as the turnaround story gains genuine traction. The new foundry strategy is attracting serious customer interest, and the market is beginning to price in successful execution. Micron added 4.8%, riding the memory cycle recovery that semiconductor investors have been anticipating for quarters. And Oracle jumped 6.6% on accelerating cloud revenue growth. The tech rotation is real, and semiconductors are leading the charge. When you see strength this broad across the semiconductor supply chain, it signals more than just a one-day event. It points to a structural shift in institutional allocation back toward technology. In the fintech world, PayPal announced it is spinning Venmo out as a standalone unit, a move that signals the company is actively exploring strategic options. With potential buyers reportedly circling, this could be the beginning of a larger restructuring that unlocks shareholder value. SoFi's CEO defended holding guidance steady today, with shares at $16.43 and up 2%, arguing that macro uncertainty does not reflect underlying fundamental weakness in the business. The fintech sector is undergoing a significant reshaping, and these moves are early signs of a wave of corporate simplification. Before we move on, a critical market insight. Several names in the semiconductor space posted strong gains today, but the question every investor should ask is whether this is momentum or substance. Howard Marks' second-level thinking reminds us not to confuse a rising sector with underlying strength. Chasing breakouts without fundamental confirmation is a classic trap. Charlie Munger would tell us to invert, always invert. Instead of asking what's moving today, ask what's mispriced for tomorrow. The prudent approach: let the hot sectors cool off while you search for beaten-down names with genuine margin of safety. And finally, a story flying under the radar: Blue Owl Capital surged on news that its investment in SpaceX is delivering roughly 10 times returns. SpaceX is gearing up for what could be the largest initial public offering in history, and the ripple effects are being felt across both public and private markets. This is a reminder that the biggest returns often come from looking where others are not. The SpaceX IPO pipeline is one of the most anticipated events in market history, and Blue Owl's exposure gives public market investors a taste of that private market upside. Let's wrap up with 3 stock picks across safe, balanced, and growth styles. First, for the safe category, following Benjamin Graham's margin of safety principle, I recommend PFE, defensive dividend payer under $35. Next, the balanced pick, Peter Lynch's By What You Know approach points to SoFi, a disruptive fintech growth stock under $35. Finally, for growth, Cathie Wood's disruptive innovation lens favors Intel, Semiconductor turnaround with 5.4% upside today. Diversifying across these 3 styles builds a resilient portfolio for uncertain markets. I'm Chloe, and I'll see you in tomorrow's briefing. Subscribe to stay ahead of the markets every single day. We break down the data so you don't have to. See you tomorrow at 7 a.m. Eastern. Check our shorts for a 60-second highlight. That's all for today. We all become wealthy together.